What's your reaction? What's your response when you see LinkedIn down 45%?
Yeah, absolutely. You know, it makes sense. People are losing their minds over...
It makes sense? People are losing their minds?
Yes, I mean, so we've got a light Q1 guide, and sure, LinkedIn, they disappointed in terms of that, but the long-term thesis here is still intact. ARK Invest research shows that friction in the US labor market costs us $630 billion a year. LinkedIn is fundamentally a recruiting and retraining company with extremely strong network effects within its user base, which is why we added to it in our ARKK, ARKW, and ARKQ funds today.
Wow, okay.
Youssef, if you could just weigh in on what's really happening across the space that you cover. What are clients doing here when they're so quick on the trigger right now to sell these high valuation tech growth names?
Yeah, well, as Bob was saying, we're in a risk-off environment. And so what's going on is people don't want to buy. And so we just need more buyers than sellers.
Go ahead, Youssef.
Yeah, so what I was going to say is clearly the momentum is out. And so if you're a momentum stock like a LinkedIn and you happen to announce a quarter that was fine, but a guidance that was not, then obviously you're going to be down the lot. I think 45% or 40% is a little exaggerated, but that said, we understand people being, not happy. You're seeing a lot of hate selling. But I would go back to something Chris said, which is fundamentally, this really does not change the thesis for LinkedIn. If you look at two metrics, you should really look at the number of users that LinkedIn was able to add during the quarter. They added about 25 million users in the fourth quarter. That certainly qualifies them as being a very, very healthy platform. They don't have a Twitter problem. And the other metric is to look at the number of customers they've been adding in the fourth quarter as well. And these are corporate customers spending 40 to 50,000. They continue to do that. So the platform is very healthy. The valuation was certainly ahead of itself and now needed to be adjusted.
So given that both of you seem to think there are still reasons to like a name that's down, again, 45% in one day, Chris, just some thoughts here before we have to move on as to why you think the market is behaving just so punishingly today. I mean, what has changed? Is it because people feel like the Fed bid is out of the market? You know, your colleague mentioned their momentum names. You know, why? Why is it down 45% today? What do you think is going on?
So I think this fundamentally comes down to who the investors are in the market. We have, the baby boomers. They're setting up for retirement. They're in cash and bonds. We have millennials. They're 55% cash. We just don't have buyers in this market. We need the millennials to come out. We need them to start buying stocks. That could lead to another boom, just as we had in the late 80s and early 90s.
Youssef, if you could just, before we have to go here, what's happening across the space of internet names that you cover right here? I mean, we're having a downward reset in the valuations of the likes of LinkedIn. You both say it kind of makes some sense. Are we going to have to see this kind of a haircut across the board?
I think you're seeing it. The valuations are still not cheap. The Cantor Internet Index basically values the Internet Group still at somewhere around 13.5 times forward EBITDA. The historical range is anywhere between 8 times to 16. So we're still towards that upper range. And so we still probably think that there is a little bit of downside, but not necessarily for LinkedIn. We think that the Facebooks and the Googles are certainly trading well, will continue to perform better, but the smaller cap names will continue to struggle, and other names that report a blemish on their numbers will continue to get punished very hard.